Did you know your mortgage rate isn't just a number pulled out of thin air? It's actually a reflection of you, your habits, your history, and your home. Most people jump into house hunting before they understand what goes on behind that rate, and that can cost them more than they realize. In today's video, we're going to break down the real factors that shape your mortgage rate, like your credit score, job history, debt load, and even the property itself. We'll also talk about why it pays, literally, to start planning 6 to 12 months before you apply. That timeline gives you space to educate yourself, get your financials in order, and build the right team around you. Because when it comes to buying a home, it's not about speed, it's about strategy. Hey, I'm Josh Lasquette, realtor, husband, data-free, and someone who cares deeply about helping families like yours stay grounded in truth while building something lasting for today and the future. So let's start with your credit score and debt to income ratio. Did you know that even a small bump in your credit score, say 20 points, can save you thousands over the life of your loan? Your credit score tells lenders how you handle money. The higher it is, the more trust you earn. Your DTI, or debt to income, is like your balance sheet of stress. How much you owe versus how much you earn. If you're spending half your paycheck on debt, it's hard for lenders to say yes. But if you start planning 6 to 12 months ahead, you can chip away at those balances, increase your score, and walk into your mortgage application with momentum. Here's something you might not know. It's not about how long you've been at a job. It's about how stable your income looks. A steady record of earning, even across different roles, tells lenders that you're dependable. Think of it like building a sturdy table. If each leg is cut evenly, it stands strong. But if one leg's too short, it wobbles. Planning early gives you time to show that stability and smooth out any career transitions before you apply. Now, let's talk about the home itself. Did you know that your interest rate can change based on the property's location and condition? Homes in stronger markets with good resale potential are less risky for lenders. The condition matters too. A well-maintained home means fewer unknowns. And then there's your down payment. Putting more money down reduces the risk for the bank and gives you instant equity. It says, I'm invested. Start saving early. Even if you're not buying until next year, every dollar you set aside now strengthens your position later. Now let's demystify the loan itself. A fixed rate loan is steady and predictable, like building with solid oak. An adjustable rate loan might start cheaper, but it can shift like soft pine in humidity. Flexible, but risky if you're not ready. Then there's option to buy points. Pay a little more up front to lock a lower rate long term. It's like buying higher grade materials now so your project lasts longer. These details aren't just fine print, they're the gears that drive your payment for decades. All right, so here's where it all comes together. Did you know that by starting your home journey 6 to 12 months in advance, you can fix credit issues, stabilize income, and build a team that actually has your back? That timeline gives you room to breathe, not scramble. You can learn how the process works and ask questions before you're signing contracts. In a world where everything is click and go, we can fall into thinking we've got it all figured out. But buying a home is one of the biggest purchases you'll ever make. So don't rush it, build it, and build it with people you trust. Now, I've helped a lot of families through this journey, and I'll tell you, the most peaceful ones weren't the ones who had the highest credit scores or the biggest budgets. They were the ones who took their time, learned, and surrounded themselves with the right people. That's how you build legacy, not through perfection, but through preparation. If you're thinking about buying a home soon, start the conversation early. Talk to a trusted lender who can help you understand your rate and your options clearly. And if you'd like me to introduce you to someone I trust, reach out anytime. I'd be honored to help you build your team the right way. And remember, a single smile is infectious. It can spread joy and cover a mile. See you next time.